Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hello and welcome to the COB this Tuesday. I'm Juliette Sarli. On a day when we saw the market hit 8,000 again on the S&P ASX 200, looking like it might just close a bit shy of that. Let's see where the CBO 200 is ending out the day. A gain of around 0.2%, 1,527 is where we sit. Very light on, of course, in terms of economic data this week, but a lot of expectation that we are going to see the trajectory of the Fed cutting path really well flagged at the Jackson Hole Symposium later in the week, and that is sending the dollar down, our dollar higher, Asian shares also higher. When it comes to the themes then of the day, as we say, 8,000 again. We'll talk about that with Martin Crabb from Shaw and Partners shortly as well, but it does look like the ASX 200 might just close shy of that. I'm seeing it at 7,996. The RBA, very defiant again. We had the minutes released from the RBA's board meeting. Now we know, because so much has been flagged since then, there was the press conference straight after. Michelle Bullock's spoken a couple of times, including testifying to Parliament in Canberra, but they really did double down on the fact that there was no talk of a cut in August. It was about whether they hiked or whether they held. And of course, as we know, they held. Inflation still too high, according to the RBA minutes. And gold rush, we've got gold steadying near those record highs. Some really good moves coming through from gold players today. Let's have a quick look then at the sectors and kick it off with the big miners as well. All looking pretty solid today, with the exception of Mineral Resources. Fortescue clawing back some of its recent losses due to the weakness in the iron ore contract. Retail stocks as well. Baby Bunting came through with its numbers today. Now, it was really more about the forecast and as well the forecast from KMD Brands that sent both those share prices higher. KMD actually warning of a preliminary fall in its profit when it comes through with its numbers. The other retailers looking good. Looking at the banks as well. ANZ there, and NAB in focus. ANZ with its third quarter trading update notably didn't actually give its cash profit though, and CBA Westpac a little bit mixed as well. And of course those gold players we were talking about, let's have a look at those. Newmont, Evolution, Regis Resources all looking very solid today. A bit of a switch out of De Grey Mining. Looking at some of the corporate news, I mentioned ANZ delivered its third quarter trading update. Net loans and advance payments edged up. Customer deposits also high, but interestingly, ANZ did notice, or did flag rather, they're starting to see a pickup in mortgage arrears. Shares though higher by 0.5%. Ansell posted a near 49% drop in full year profit, but shares rising today on the outlook. Hub24, Andrew spoke to the CEO, Andrew Alcock. They are seeing net inflows on the year, and underlying profit rose 15%. Shares a little flat today. Baby Bunting, I mentioned, with its results saying sales at the start of full year 25 improving, and KMD saying that it is seeing improving store sales for the first half, for the beginning, I should say, of full year 25. But as I mentioned, preliminary results down on the year. All right, let's get into it all with Martin Crabb from Shaw and Partners. So it doesn't look like we're going to hit 8,000, but we did hit it intraday.
Yeah, it'd be nice for the market to close above that 8,000 level. I mean, viewers may not know, but I mean, those index levels don't really mean a lot to market participants. It's just kind of like a headline. It's not like everyone says, oh, 8,000 is a great number. There are a number of strategists in the market who have 8,000 as their full year target. And they've had it for a while. So, you know, we're here in August and we've already got there. But just a reminder, I mean, we often forget things very quickly in this industry, just how this market's been down by the escalators and up by the stairs. So we can get excited about the fact we've got back to 8,000. But just look at the market movement so far this month. We had those big 2 down days at the start of the month that took 6% off our index. And we were very, very slow to recover. I mean, Japan recovered automatically, right?
Yeah.
Whereas our market's just kind of clawed its way back. So this shows that, you know, the downside risk in this market's still there, in that it's like if you miss on an earnings result, you get hit badly. If you've been on an earnings result, you claw your way back up. So it does feel like down by the escalators and up by the stairs at the moment.
Yeah, it's a great chart. Love that. Let's look at some of the big movers and shakers then. I mean, we've seen trading updates from a couple of the banks. ANZ, interestingly, not actually giving its profit, but you say that NIMs have led to some solid performance here.
Yeah, so the two big swing factors for banks are the net interest margin, which is the difference between what they give lenders money to and what they give depositors money to, and then the bad and doubtful debt provisions. And the NIM, the net interest margin, is basically driven by competition in the market. So how much a bank's chasing market share, and you tend to do that by more aggressive pricing, and there's been hardly any aggressive pricing. So net interest margins have held up a lot better than people thought, and even a 1 or 2 basis point difference in a net interest margin could be a significant swing factor for a profitability of a bank, which may have sort of $500 billion worth of loans, for example.
Yeah.
The other factor is just bad and doubtful debts. There haven't been any. So, going back probably 12 to 18 months, everyone was saying, Australia's going to be in recession, interest rates are going to get jacked up a lot, it's going to cause people to default on their home loans. Now, a combination of factors: A, people are ahead on their mortgages, but B, the government's got quite a lot of measures to help out first home buyers and pay their insurance for them and almost underwrite them. So one of the companies that provides mortgage insurance is Helia. It used to be called Genworth, and they're one of the biggest providers, and they came out with their results today and again showed very, very strong levels of profitability based on the fact there's hardly any loan defaults. So I think ANZ had 2 basis points of loan defaults. So what should be happening at this point of the cycle, when rates have been this high for this long, is people should be getting in trouble with mortgages, and it's just not happening, and that's caused the banks to re-rate.
Yeah. Well, Judo Bank, another one, and it also reaffirmed its full year 25 profit growth target.
Yeah.
So another one kind of looking good.
Yeah, and they're more in the SME lending, the small and medium enterprise lending, which most people will know the big banks have got out of that because of the capital requirements, and so banks like Judo Bank, which is a bank, have stepped into that market.
What do they call it? A challenger lender.
Yeah. So they're up. Look, if you can't get a decent deal from one of the big 4, or they won't give you a loan, you can either go to a private credit provider, and we know there's millions of those out there, or you can go to another bank like Judo Bank. So Judo Bank's done quite well in that space. It has been a little bit of a cork in the ocean, that stock, because if people start to get worried about the economy, a stock like Judo Bank's going to get knocked around. But as I said, it's this better than feared narrative, Juliet, because I think people have gone into these results thinking, there might be a problem with some of these bad loans or whatever, and we just haven't seen anything. So Judo are sitting up at maybe over 10% today, Judo.
I saw an interesting commentary though from Macquarie saying, look, to your point as well, a lot of these are potentially better than what we had feared.
Yeah.
But is there going to be some bad news next week when it's sort of everyone's got to get through right at the end and things turn around potentially?
Yeah, the old cockroach theory, the bad results are always head to the end. I mean, most companies do tell you well ahead of reporting season when they're going to report, and most analysts have got their calendar sorted out. So, I think the days of waiting till the last day of the quarter and waiting till the Perth Stock Exchange is at 5 o'clock and then, literally because the ASX goes to 5 o'clock Perth time and coming out with a result then, I think those days are over. We still do tend to get slightly better results early in the season and slightly worse as we go on, but nothing like it was, 10, 20 years ago. But so far so good. Like, it's probably 50-50. We had a look at some numbers yesterday on who, how many had beat and how many had missed. And how many companies got upgrades versus downgrades, and it was literally 50-50. And I think today's probably again another 50-50. There's been some good beats and a few misses as well.
All right, well, let's talk about some of those. And it was interesting on the retail front as well, because Baby Bunting and the Kathmandu preliminary numbers, this was more about the forward guidance, the share price reaction, as we know, because they are starting to see a pickup. But if you look at some of the numbers for Baby Bunting and Kathmandu, really showing that the consumer is being hit a little.
Yeah, well, those 2 categories, I think, and again, it's really bifurcated across the retail sector. If you're in things like travel and stuff like that, you're doing really, really well. If you're in, discretionary spending, now is Baby Bunting discretionary spending? You got a kid, you need to buy stuff for the kid.
But do you need a bugaboo? Exactly.
Do you trade up or do you trade down? And even with Kathmandu, if you're going on a holiday, do you really need to get the top end stuff, or can you get the cheaper stuff? So I think those brands do really, really well when people are trading up, not so well when they're trading down. So I think overall, retail's still pretty tough, but it's really, really tough if you're in the discretionary, the more discretionary end. It's better if you're in the more staples, or you're selling to the over 65s. The over 65s have still got a heap of money. They're saving a lot. They're getting pay rises on their deposits. So they're the ones that are doing quite well.
Maybe they're buying the bugaboos for their grandkids. All right, let's talk about Dexus, because its shares were hit.
Yeah, tough day.
So data centres here, potentially.
Yeah. Well, they've sort of ruled them out as being a bit too expensive, but they're probably the biggest pure office exposure in the market. Like if you're an investor like me and you're buying 20 stocks in a portfolio and you want to play office, you'd probably buy Dexus. And I think people have been trying to pick the bottom of the commercial real estate market for probably most of this year. We've had a couple of false dawns. People have seen how far office values have fallen and they're trying to say, we're getting close to the bottom, we're getting close to the bottom. And Dexus kind of ruled that out a bit. They said the Sydney office market's going to stay soft until at least next year, and we don't see a turnaround in Melbourne until 2026. You know, Lendlease on their call yesterday were also a little bit soft on the outlook. It's that they all think we're close to the bottom, but we haven't hit it yet. And my sense in talking to people in commercial real estate is the bid-offer spread is still significant. Like there's buyers, but they want prices down here, and sellers are still looking there. Even Dexus have got, I think, something like $2 billion of assets they want to sell. So they're all trying to rotate their businesses into higher growth areas. But there's a lot of stuff. Like Lendlease have got $2.5 billion worth of stuff to sell. Dexus, I think, have 2. So there's lots of office for sale. Where are the buyers? And can you get tenants? Like if you buy a building, can you actually get tenants for it? So I think it stays tough in real estate. And I'm probably one of those people, I'm going to be late. I'm going to miss the bottom. I'm going to be late to it, but I'm going to buy with a lot less risk because I'll wait for signs that things actually have bottomed out rather than saying, well, it's fallen a lot. Now's a good time to look at it. So I think you've got to be careful trying to pick the bottom.
All right, just a quick look in terms of as well what we are still expecting. Tomorrow's going to be a really crazy day.
Tomorrow's a massive day. So, I mean, 2 companies I'm really looking at closely is IDP Education and Domino's. They've both relatively recently had profit warnings of some description. But, you know, I think, as you said earlier, Julia, it's about the outlook. So with some of these results, under continuous disclosure obligations, if companies are going to be significantly away from the market, they've got to tell. And so I think both Domino's and IDP Education have done that and tried to estimate the impact of some of the changes that are going on in their industries on their outlook. But I think tomorrow will be really about how confident management is, what they see the next, like, is there a change to the student accommodation outlook and the student placement outlook? And are the measures that Domino's are taking more specifically on turning around their troubled Japanese and French operations, are they starting to see results from them? So they're both really interesting results to look at tomorrow.
We are going to be speaking to Domino's, so stay tuned for that one. Always a pleasure, Martin. Thank you so much.
Julia.
Martin Crabb, Shaw and Partners. Now, we were talking about Judo Bank, and the stock of the day was Judo Bank. We heard from Mark Gardner from MPC Markets, and Mark Morland from Team Invest was Mark Squared on the call.
If we do get softening in the economy and weakness in the economy and the market, this is probably a good one to be buying the dip on into the next cycle, because if you've got a growth cycle in the economy, and we've been, since these guys listed, we've been very up and down, back and forth, higher interest rates for the first time in a long time, and they've still managed capital very well. So this would be the sort of thing I think will probably double or triple in price over the course of a good cycle.
There's not enough history yet. I'd say bravo, they're doing a good job, and in a couple of years it might start appearing on our filters. And I agree, if you had it, you'd hold it, but I wouldn't be in a hurry. I agree with Mark. I think the banking cycle, we're at the high end of it at the moment, and these guys are still not proven. Yeah. So, they're looking good, and I think their positioning is very good against the big banks, because the big banks basically have walked out of small business lending completely. Yep.
All right, let's have a look at the market leaders on a day where we saw an 8th session of gains. Monadelphous, we mentioned after its numbers doing very well, along with Judo Bank, which of course was the stock of the day. Reliance Worldwide, Ansell, Ingenia, all out with numbers, all being well received. To the downside today, Dexus, we just talked about that with Martin, and he was talking about the data centre impact. Now, the other losers today, were Audinate, Iris, Magellan and Zip, and a lot of those have already, of course, reported to the market. In the small end of town, Elixir Energy had a good day, up by 12%, as did Baby Bunting, and that was really on its outlook, as we mentioned, with Martin Crabb as well. And just having a look at the downside today, a little bit of mixed movement, but fairly resource heavy with those laggards today. All right, tonight we get Eurozone final inflation, also inflation data out of Canada, and more FOMC members speaking, including Raphael Bostic and also Barr. And just looking ahead tomorrow, of course, a very busy day. Look at that. We've got so much happening tomorrow. We are going to be speaking to IAG. We're going to be speaking to Scentre Group. We're going to be talking to Cedar Woods. We're going to be talking as well to Domino's. So many Parenti, Pexa Group, so many CEO interviews tomorrow. So do stick with us on AusBiz. Really light on in terms of data. It's all just going to be about those earnings. Let's have a look at where the market has finished the day. As I mentioned, an 8th session of gains. The CBO 200 up 0.2%. And the ASX 200 just shy of that 8,000 point level. As we mentioned, it did push through that earlier. 15.7,995. Maybe we'll get there and close there tomorrow, given it is a big earnings day. But that does it for this edition of the COB. Be sure to join us bright and early from 9:45 a.m. Eastern tomorrow.